Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Wednesday. Wow, hump day, August 3rd here, and we'll start off with the economic news releases this morning here. And the first item here is the ADP employment. Remember, we've been getting different numbers from what the government provides, so these aren't really accurate. But let's go ahead and take a look here. Last month it was 145,000 for June, and they were kind of forecasting to drop down to 85, and it came in at 114. So slightly better news, but again, they're not really. They take it for a grain of salt, as labor. The last time when they saw 145, they rejoiced, and then all of a sudden it was a huge disappointment when the Bureau of Labor released their numbers. So let's now take a look at the ISM non-manufacturing or services. This is the servicing side of jobs, and it was at 53.3%. They figured it would remain about the same, and it dipped a little bit down to 52.7. And we have factory orders, so it was up 0.6% previously, and they kind of figured it would drop, and sure enough, it did. So all this kind of bodes not too well for our economy. It's showing more signs of a slowdown here, obviously, which is not good for the economy. We need a pick up. Factories and manufacturing has been kind of what's been kind of keeping us through this whole process, and obviously we're seeing some slowdown in that sector here. So let's go take a look here at the headline news, and basically the stock market is down, and then today's focus that the traders are looking at is U.S. economic slowdown. Are we kind of going into a double dip recession? Are we on the verge? Basically, are we looking at the beginning stages of another dip, beginning of another recession here? So that's what they're kind of looking at here. And let's go ahead and take a look at the bond market here. Where interest rates are at. We're on a huge rally here, kind of like Pamplona with the running of the bulls. So it looks like we're just on a tear here. They're just going up a little too fast right now. So I won't be surprised at some point we're going to have some profit taking in here, but it's just running away. And sometimes when we get this momentum going, it just keeps carrying and carrying and carrying, and that could very much create a big drop and then maybe work its way back up again. So be prepared that could potentially happen, as we saw some gaps here and here on the way upwards. So let's go ahead and I'm going to also show you a long term here where we're at. We're actually very close to all-time highs. This was last year when we had some extremely high market here for bond market, and we're only about 1 point away from that. So in theory, it's possible we could actually see better rates than we did last year. Because remember, we also saw QE1 and QE2 kind of interfering, and we didn't see a normal market. Right now, we don't have that in play, so we could potentially see that kind of worsen the bond market. But this could actually lead to probably the best rates we may have seen for extremely long time, or if ever. So be prepared. We could have extremely low rates coming up here, and we may have better rates than we saw last year. And again, as we saw here, as quick as it can come up, it can quickly drop down and stuff. See how quickly that dropped back in, from last year. That's when the QE2 came out, and the bond market just started tanking. So be prepared. All right, folks, you guys have a wonderful day. I'll catch you tomorrow. But if you guys are looking to refinance or looking to buy a home, hey, go ahead and take a look at my website at californiamortgagetips.com. A lot of great information for home buying processes. Your first-time home buyer. Also check out Mike's HomeBuyerUniversity.com. A lot of great seminars I sponsor on a weekly basis. It's all content, great information to help you learn a little bit more about the process of buying a home. So I'd be more than happy to help you out in any way I can. All right, folks, you guys have a wonderful day, and catch you tomorrow.